Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Well, last week, I observed that the NASDAQ 100 was breaking out, or at least trying to break out, over its bubble price, which is 7.4 times book. But we had not obtained the necessary confirmation from the Standard & Poor's 500, which had been holding steadfastly below its super growth price, or 3.5 times book. Well, as of today, the Standard & Poor's has moved right up to that key breakpoint and a little beyond. If the S&P manages to hold here and head higher, then we will have a confirmed technical breakout by the overall market. And if so, then there would be a fair way for the markets to run. As we will see momentarily, the FANGs are not standing aside. I suspect that this breakout is being triggered by what may well be an incipient bubble in the artificial intelligence, that's the AI universe, which is well represented among the FANGs. An emerging bubble, by its very nature, is caused by increasingly rampant speculation based on hoped for but very uncertain fundamentals. As such, they can initially be highly profitable, but as time goes on, increasingly risky, and tend to lead, if history is any guide, to boom and bust behavior. Using the tools of our SVA service, however, we will be able to track the progress of such a bubble if indeed one is emerging, as I suspect. Unlike cigarettes, which come with a warning label on the package, market bubbles come unannounced and are greeted, initially at least, by unalloyed enthusiasm. To the extent that you choose to invest in, actually gamble might be a better word, in such a potential market mania, you should be aware that they can be hugely volatile and tend to end badly, and often abruptly. Now, before we take a close look at the FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Let's start with NVIDIA, which has broken out over its HP6, that's 33 times book value, which is its all-time high peak, reached once in 2000 and the other time back in 2021. Breaking out here to a new high typically means, when I've seen this before, that these movements can go a long way, even if they appear expensive at the outset. Alphabet is just breaking out over its mid-super growth price. That's 5.5 times book value. Been holding there nicely and moving now with the strength in the market. What is interesting, however, is that Amazon has followed suit and is now breaking out over its bubble price. In fact, interestingly enough, when I look at Amazon, it almost perfectly emulates the NASDAQ 100. As the NASDAQ was breaking out, so was Amazon. And the highs and lows have been almost perfectly matched by the highs and lows in the NASDAQ. Microsoft continues to surge forward. This I think could be almost considered to be the original AI stock, and I'm surprised actually that it hasn't done better. However, it is surging strongly upwards, and well, the HB2, which is 12 times book, is the next resistance point, but I would not be surprised if this is the kind of market we're in, that it's going further than that. Apple continues to, I think I can best describe it, just kind of mush along. just above its HB6 or 33 times book value. Look at the trend of the earnings forecast. They fundamentally going nowhere. But this stock is so large with a market cap of more than $2.8 trillion. Everybody holds it, and everybody, I think, is scared to sell. Well, we'll see in time. Meta continues to ride nicely its own increasing fair market value. Zuckerberg has promised that he would do what he could to get those earnings back on track, and he's been doing that nicely. And of course, then the stock has been following it up nicely. I would not be surprised if we are getting an overall breakout in the market, that we may well see the bubble again for the fourth time for this stock. Netflix had a perfect hit, actually, just very, very recently at its bubble price again, and has set back. The fair market value and the earnings trend is really going nowhere. In particular, this is not an AI stock, and I would be surprised if it breaks out. However, never say never. And finally, perhaps a stock which might consider to be the original AI stock, which is Tesla and its self-driving cars and all the rest of that kind of stuff. The only problem, of course, with considering Tesla as being an AI stock is that, in point of fact, at heart, it's an auto company. And look at what's been going on with the fair market value drifting lower and lower. However, having said that, even that stock has broken out above its HB2. So we're pretty much have a breakout in the FANGs pretty much across the board, with the exception of Netflix. So in summary, what are we seeing? What I might call the AI stocks are all breaking out, led by NVIDIA. We've already seen Alphabet following suit, and now we're watching Amazon as well. I'm surprised that Microsoft, founder, you might consider, of the AI movement, hasn't been stronger, but it's got a good head of steam. Meta, if it hasn't already, will probably claim AI status and continues to go higher on the promise of rebounding profitability. I still expect that its bubble price will come into play, especially if the markets continue their breakout and investors become increasingly optimistic. There are three non-AI FANGs. Apple, which I'm sure will sooner or later try to claim some AI parentage, continues to hold up on its share buyback program. It's not exciting anymore, but with a market cap of almost $3 trillion, everybody owns it, everybody believes in it, and no one dares to sell it. Yet. Netflix has met all of my upside expectations, and what I see ahead is not exactly intriguing. I would cheerfully sell, again for the second time, at its bubble price. Finally, I expect that Tesla is kind of tailgating the market, as its own fundamentals are steadily weakening. Maybe Elon Musk can now claim that its cars are being guided by AI, and I suppose to a real extent they are. But so what? Now, if it strongly appears, the NASDAQ 100 market is breaking out over its own bubble price, and it is now being confirmed by the S&P 500 with a breakout over its super growth price, that's 3.5 times book, then you may choose to throw caution to the winds. I've seen this kind of thing before, the last time being in the 1999-2000. Breakouts with very high valuations, great stories, but very poor supporting fundamentals. Volatility can be fierce. You can have a lot of fun while things last, but they all end in tears. Again, please be aware that you will not be investing in these stocks. You will be gambling, purely and simply. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday